Hey guys, so whew, what a week it's been in banking. First, the failure of several US banks, with Silicon Valley Bank being probably the most prominent one in that list. And more recently, the fears have spread into Europe with news around Credit Suisse's financial reporting controls and the backing from their main investor. And as a result, panic and concern has spread across to this side of the pond. And if you followed the news, if you lived through the 2008 crisis, you might be thinking, oh, here we go again. And you might also be asking yourself how you're going to get through it, or if you're ready to weather such a crisis. And that's what I'm going to talk about in this video, being prepared for these kind of situations. So let's get right into the video. So let's have a quick recap of what has been happening over the past week that has sown panic and fear into investors, into the banking sector, and into the world economy now probably as well. So this essentially started with Silicon Valley Bank, of which most of its business was centered around tech startups, which obviously went through a big boom during the past few years as a result of, people staying at home and tech companies as a result performing generally well. And all these deposits that tech companies had deposited in Silicon Valley Bank were then reinvested into bonds. Now, obviously with inflation going out of control and interest rates rising, with the Fed increasing interest rates, the value of these bonds has plummeted. So that forced the bank to sell them at a loss, and it created some concerns about their financial health long term. And with lots of investors pulling their money out, went under and failed. And so with such a big bank in the US failing, this has obviously caused for concern, even with Biden's administration stepping in and guaranteeing the deposits of the depositors in that bank up to $250,000. Fast forward a few days and we hear of Swiss bank Credit Suisse mentioning that there were material weaknesses in their internal financial controls for their prior year's financial reporting. And as a result, the biggest investor in Credit Suisse, the Saudi National Bank, said that they would not be investing any more capital into the bank, which again caused fears, caused panic on this side of the Atlantic, because Credit Suisse is such a big entity, it has global exposure, so of course such news would be cause for concern. And Credit Suisse has been bailed out by the Swiss Central Bank, which has eased a lot of fears in the market since then. But of course the question still remains: what comes next? So why would this cause fear and concern? The banking sector is very tightly interknit. If one bank goes down, then it could disrupt the rest of the sector. It could mean that, there are weaknesses elsewhere in the banking sector, in other banks. And if your bank fails, then of course you're going to wonder what happens to your money. And of course, if multiple banks fail, then of course that would be a quite a large scale catastrophe, like we saw almost in 2008. And whilst in this video, I'm not going to speculate on the likelihood or the possibility of a major financial crisis in 2023. What I am going to do is offer some insights as to what I might do to prepare myself for such a scenario. So let's have a look at what I would do. So the first thing I would do is always have some cash on me, either a few weeks or up to a month of expenses that you might pay for in cash. So that might be supermarket, it might be public transport, it might be paying for petrol or diesel or gas for the car. Cash that you would need to cover your essentials if you couldn't access money from the bank for a short period of time. When banks failed in 2008, a lot of people would rush to the bank and there would be long lines of people trying to withdraw their money, and many of them would have not been able to get it out. So by having some cash on you in person, you make sure that you can weather a short-term storm by having cash on you in person if for whatever reason you can't access money from your bank account. And of course, I'm talking about this from, a banking crisis perspective for the purposes of this video. But even outside of that, hopefully this doesn't happen to anyone watching the video, but maybe your bank card gets swallowed by a machine, you lose your wallet, but as a result, you've got no other payment methods. By having some cash, then you know that you're safe and that you can weather, a short-term liquidity crisis, let's call it. So even if you're someone who prefers to pay by card, or you have everything set up automatically within your bank, it doesn't hurt you to have a bit of cash on you in case such a scenario comes up. Next thing is to have a good emergency fund ready. Now, depending on what your job is, what your industry is, this could be anywhere from 3 to 6 months if you're, employed by a company, up to a year maybe if you're self-employed. And again, cash will help you in the short term, but if the worst comes to the worst and for whatever reason your income stream stops, and you can access that money, then you have something to fall back on, again, to keep you afloat for the medium term if such a scenario were to set in. Again, I don't want to speculate on what a major crisis might look like, but I think you should be able to get access to that money that's in your emergency fund in the medium term at least, if a crisis were to occur and you did need access to that money. The next thing you can do, which is really important, is to diversify your banking. So as I mentioned when we were talking about Silicon Valley Bank, you know, the US federal government assured depositors up to $250,000 for any money they had in that entity. In most EU countries, these schemes will cover you up to about 100,000 euros. In the UK, you have the FSCS, which covers you up to £85,000. But remember, this is per entity. That means that if you have, for example, 150,000 euros in one banking entity and it collapses, then you're only insured up to 100,000 euros and 50,000 euros of your money will be gone, disappeared with the entity. That's why if you do have a large amount of cash or you have investments or savings, it's a good idea to consider splitting them across multiple banks so that if one fails, then, you know, not all of your money goes with it. You know that you still have something in another bank and you've also got enough that's covered by the deposit scheme in a bank that's failed so that you can get the money back without worrying about, you know, money going missing. And when I talk about diversifying by banking entity, you know, this can be within your country, but you can also do this internationally as well. You can bank outside of your country to diversify further your money and your finances to keep it safe. Now, if you are interested in diversifying your banking geographically, I use a service called Raisin, and that allows me to open deposits and savings accounts in other European countries that I don't live in. And it helps me to diversify my banking geographically, but also access the best savings and interest rates that are out there. I've done a video where I've talked about how Raisin works in detail, which you can check out, and I'll also leave my sign up link in the video description if you're interested in signing up. So those are my thoughts, guys. I hope you found them helpful and I hope you enjoyed the video. Leave a comment and let me know, what do you think will come of this eventually in 2023 and what would you do to prepare for a crisis scenario. Till next time, I'll see you on the next one and let's get this money.